What up, what up, what up, what up, what up? We back with another one. It's a reaction. It's gonna be slightly on a different tip from some of the other reactions I've already done, but it's a little more in line with my full-on expertise. I am a financial behavior specialist, so that means like I'm invested in everything finance, the world of finance, how money moves, how people make money, how money declines in economies, things like that. That's all of my specialty. I am a forex trader. You can check my playlists and you can find the How to Trade Forex for Beginners series, or Forex for Beginners. How to Trade Forex Like a Boss series. I was gonna name it How to Trade Forex for Beginners, but I figured a lot of people already had that name. So my series is called How to Trade Forex Like a Boss. You can find that and learn a little bit, well, learn everything you really need to know about how to actually use money to make more money, without having to give me any of your money or anything like that. But this right here, one of my homies sent me. It was like it kind of falls in line with like a lot of my content, and there's a whole bunch of gems dropped in it that y'all should probably hear about. So we're gonna see what's to it, see what they're talking about. It's basically like it's called the credit card game. I'm pretty sure it's about how people like either scam with credit cards or how credit card companies are scamming us, one of those. But we about to get into it. Oh no, lol, oh, my girl texting me. All right, let's get into it.
Tonight on Frontline, for 30 years, Americans have played a game with the banks holding all the cards.
Changing the terms, raising interest rates, changing the rules of the game.
Consumers use plastic for 100,000 transactions a minute. It has produced billions in profits and nearly $1 trillion in debt.
Americans simply cannot pay back the level of debt that...
Think about that, dog. Like, we've gotten to a point where, like, like they say, Americans cannot pay back the debt that has accrued over this time. Yet, for some reason, they keep giving out loans. But what's nuts is I can't get a loan. I can't get a loan right now. Right now. Pretty soon I'll be able to get whatever loans I need. But with my personal credit right now, like, just because I don't have very many things on my credit's fine. I have like a 650. It's not like great, but it's not like bad. You know what I mean? Like I'm in like the fair to good credit range. It's usually, I mean, I was able to get my last car and this place with the score that I have. So like it's not like I can't do anything, but like bank loans, they're not really rocking with my score just because there's not much actual like payment history behind it. You know what I mean?
has grown over the last 30 years.
And the credit card industry even played a hand in the economic meltdown.
We had consumers refinancing their homes to pay off all their credit cards.
Apply now.
And then they went back out and built their credit cards back up.
Now, as credit card losses are piling up, the government is stepping in.
We need to fix the rules, make them tougher, with a simple, clear, single mission to protect consumers.
Why hasn't there been credit card legislation to control some of these abusive practices? Why did it take a near depression?
Lobbying power.
Tonight on Frontline, correspondent Lowell Bergman and the New York Times investigate the battle over the card game.
20 years ago, credit cards were a stable, profitable part of the banking industry. But then a brash new player arrived on the scene who would help change everything, turning a relatively staid business into a multi-billion-dollar bonanza. It was a company called Providian Financial, and its former CEO lives here in this estate modeled after the White House. His name is Shailesh Mehta, and since he left Providian, he has never agreed until now to be interviewed about the company.
Let me
Providian.
Let me pause this. I gotta exit out some shit so it'll stop skipping on y'all. I got a lot of tabs up. My fault. Everything trying to load up and whatnot to do that. And well, I'm gonna keep that. I'm gonna exit that. All right. Should be crispy now. Should be crispy now.
It was a very profitable business. We make over $180 million quarterly profit.
Almost $1 billion a year
We were making $1 billion a year
in profit.
in profit before tax.
Profit.
And while Providian was successful, their name would become synonymous with the tricks and traps that have entangled so many credit card customers. It made you the poster boy for what's wrong with credit cards.
It made us the poster boy. We were the poster boy, correct.
Mehta says he agreed to this interview because he thinks Providian's reputation was unwarranted. He believes they were pioneers who gave credit to those who previously did not qualify, the riskiest
Yeah,
of
for a
borrowers.
reason.
There were 30 to 40 million potential households, prospects, have no credit card. So we said, how do we meet the needs of these people who do not qualify for a regular credit card?
So they're lower income people.
So there were lower income people, there were bad credits, there were bankrupts, there were young credits, there were no credits.
They were called unbanked people?
We labeled them unbanked. That was the word came out of Providian, the unbanked market. And then it became like an industry standard word.
And so your business took off.
And our business took off.
I got a Visa Gold with a $1,000 credit line. People treat you differently when you have a gold card.
And with Providian, my credit just keeps getting better.
Visa from Providian, we approve.
People jumped at the chance to get a credit card, seeing it as a passport to a more affluent lifestyle. And Providian was betting that these riskier customers were more likely to carry a balance. So what you were going after were the people who weren't going to pay their bill off in full.
Or in full, yeah.
Right.
And if we do so, then we will be attracting the profitable segment of the credit card industry.
And your hope was to keep them paying basically in perpetuity, right? You never wanted them to really pay it off.
If they make the minimum payment, yes, then that loan will take almost.
So basically, this is like this is one of the pioneers of this credit card shit now, and he's telling you straight up, like, the goal is to keep their ass paying for as long as possible. So y'all need to stop making them damn minimum payments now.
Almost 20 years to pay back, absolutely.
And you make more money then.
We make more money.
When Providian began, Mehta ran the company with this man, Andrew Carr, already a legendary innovator in the world of consumer finance. Carr spoke to us 5 years ago.
Many of the things that I've been involved with were in the back room on the operating side.
Carr had a peculiar genius for enticing new customers with gimmicks that were too good to be true.
When you're getting something in the mail several times a week that offers you 0% for 6 months or whatever it may be, they look at the headlines of the solicitation of the mail, they spend 30 seconds on it, and okay, I'm going to be better off at the beginning. They're going to give me something. They're going to give me a 0% rate. People believe what they want to believe.
It was Carr who came up with the ideas, and Mehta who implemented them. And their innovations would help change the nature of the credit card business. So Providian wasn't alone.
Absolutely not. They may have started it and maybe were the innovators of these bad practices, but they certainly were quickly adopted by everyone else. They started seeing the profit margins.
Robert McKinley is a credit card analyst who followed the rise of Providian.
I mean, here they were giving away products with no fee and charging interest rates and making a ton of money. And so, hey, let's do it too. And so, you know, it quickly spread throughout the entire industry.
One of the many Providian practices that spread was making people believe their credit cards were free by eliminating the then standard annual fee.
We made it look like it's a giveaway and took it back in the form of, I used to use the word penalty pricing or stealth pricing.
So the competition, increasing competition, led to the use of penalty fees, bigger penalty fees.
Bigger penalty fees.
And you were operating with your penalty fees like everyone else.
But we all had to make up somewhere because everybody had to waive the annual fee to stay competitive. Where do you make your money? So everybody increased the late fees. Everybody started increasing the over limit fees. And when people make the buying decision, they don't look at the penalty fees because they never believe they'll be late. They never believe they'll be over limit, right?
We were having some financial issues.
They were just banking on y'all being weak financially. That's it. They were just betting on everybody being weak financially in their mind. And like this, honestly, these people are what bred me. Really. They're the reason why I exist for real. Because like I stand against bad financial decision making. You know what I mean? And their whole industry is predicated upon bad financial decision making. So
change careers.
Elizabeth Blas Cruz learned all about stealth pricing when she got a credit card from one of Providian's competitors.
I got an offer for a credit card with a credit line of $500. So I was happy to take that credit card, and that's kind of when it all started. I remember when the balance was about $480 or so, and I was late on a payment. They added on a late fee and increased my interest rate. Well, that, of course, took it above the $500 credit line. And with that, they charged me an over-the-limit fee. That bill had maybe $60, $70 of fees. And every month it was the same thing, unless I...
That's how they get you. Them extra fees. They're like, wait, as soon as you a day late, finna throw a fee on it instantaneously.
Paid all that and more, which of course at the time I couldn't afford to do. There was no way I could ever get ahead.
Blas Cruz says she ended up paying $3,000. That's 5 times more in interest and fees than the original $480 she actually spent on purchases. She was caught by the traps hidden in plain sight. Credit card companies are required by law to explain the rules of the game. It's called disclosure. It's in those solicitations that come in the mail. Even Shailesh Mehta gets them. Open this one for me and tell me what you think. That's from Bank of America. And on the back it says 0% intro APR.
But there is a asterisk or whatever the mark. So I have to now read that footnote. I will have to remove my glasses to read it. So it says, for this, see disclosure summary, insert for details. And I have to find a disclosure summary, which is the one here. So on the outside, it's a 0% intro APR. In here, it says that my APR is 11.9, 15.9, or 19.9, right? And the APR you receive is determined based on your creditworthiness. So I have no idea which one I'm going to get when they approve me.
So disclosure, you say, doesn't work.
As I said, I mean, look how much time it takes for both of us to go through this. I think that your average consumer is not going to be able to translate what the real pricing is.
Now, you put out statements like this for Providian?
We did, absolutely.
Well, the criticism is that it's exploiting the customer, the fact that they don't really understand what's going to happen.
In a way, I would say yes. In a way, the pricing was designed that it would require a degree of some sort to understand how many different ways I'm paying and what I'm paying. You know, I mean, borrow on a credit card, nobody knows what the real cost is.
That would be true for this man, Don Bollinger.
I've always paid my bills, but I was running very, very lean and knew that if anything big happened that I'd be in serious trouble. And eventually it did. It really started when I found out I had tonsil cancer.
Bollinger won his battle with cancer, but then he lost his job.
It was just a train wreck. Because of delinquent payment on a totally unrelated debt that I had, one of the credit card companies told me that they were going to increase my rate from like 8.9% up to 19%. When I heard that, I immediately made a phone call and attempted to protest it. Yes, sir. And I didn't understand it all. I didn't understand how something not related to their loan, the money I owed them, would cause them to increase my rates.
Soon after, Don Bollinger's other credit card bank also raised his interest rate. That made even his minimum payments unaffordable and started a downward spiral of missed payments and fees.
It's not fair. It's deceptive.
But credit card companies say the practice has been a legitimate tool to limit their exposure to higher risk customers.
In my cardholder agreement, I said that if you're delinquent somewhere else, I have a right to increase your rate. Now, you may be delinquent on someone else for whatever reason. Suddenly, my rate will shoot up from 21 to 28%.
Well, that's universal default, it was called.
Universal default. Because they need a more and more stealth pricing, more and more penalty pricing.
There's a reason why credit card companies have been allowed to make these sudden changes to the interest rate. In the United States, credit cards have functioned within a system where it is legal for card issuers to charge any fee or any interest rate they want, without limits.
The credit card industry has always been the Wild West, that card issuers held all the cards. They could do anything they want. $39 late fees and $35 over limit fees and 30% interest rates. And yes, it got crazy. Competition ramped up to such a level that it created an industry that was out of control.
The industry got out of control because over the last 30 years, regulations on banks and consumer lending that had been in place since the Great Depression were steadily eliminated.
The cops left the streets. There was no one on the beat.
Christopher Dodd of Connecticut is the chairman of the Senate Banking Committee.
Where were the regulators in all of this?
He says that for decades, both Republicans and Democrats voted for deregulation.
And look, I voted for it. I mean,
You voted for the deregulation.
Yes, but we were wrong. And the message out there to the financiers, go ahead and do what you want. The market will take care of this. The market will protect people.
And that was the dominant ideology of the era, supported not just by Congress and the White House, but by the alphabet soup of bank regulators, like the Federal Reserve, the OCC, and the FDIC, all of whom rarely intervened on behalf of consumers.
Some people have said that we had the appearance of regulation, so people thought somebody was watching, but nobody was.
Well, that's a fact. We now know. There was a lot of regulatory power and authority out there, but they walked away from it. It was an intentional decision where they literally knew they had the responsibility and made the conscious decision not to exercise the powers that they had.
And the result for credit cards was that a system developed in which the affluent paid the least and the most vulnerable people paid the most.
This is one of the dark secrets in this industry. People who are operating closer to the margin, those are the people who get trapped. Those are the people who produce the enormous revenues in the system.
In a strange way, the banks were charging borrowers higher interest rate in order to give the wealthy people a break. In a strange way, if you look at it, because the people who have money were paying in full, and they were getting the break at the expense of the people who couldn't pay in full.
Mehta resigned from Providian in 2001 after the company had to pay $300 million following a rare investigation by federal regulators. But if Mehta left the industry, the practices he helped create would live on, spreading throughout the world of consumer lending.
Now has lost nearly 14.
And then the economy started to fall apart.
The drop in the stock market yesterday represented more than $1 trillion in losses.
The collapse of the stock market was triggered by a collapse in the consumer lending bubble.
More bad news on the housing front.
Home foreclosures continue to skyrocket.
We are focused on the current economic crisis as primarily a foreclosure and mortgage crisis. But what most people don't realize is that when subprime lending was really taking off, it was because people had credit card debt they couldn't afford, and the outlet was to refinance that debt into a subprime mortgage.
Find out how easy refinancing can be.
Combine all your high-rate credit card debt into one easy loan. Apply now.
You had consumers refinancing their homes and taking equity out, and they would pay off all their credit cards.
I've got a 4-bedroom house in a great community.
There was a huge push to refinance through ads like this one.
Like my car? It's new. How do I do it? I'm in debt up to my eyeballs. Somebody help me.
What was happening is some of these consumers were already running out of rope. This just gave them a little more rope by consolidating it, and then they went back out and, of course, built their credit cards back up.
You know, it doesn't take a rocket scientist to figure out that if you keep borrowing and borrowing in order to consume now, eventually you crash and burn.
Employers cut another 663,000 jobs last month.
Forecasters have said unemployment will continue to rise.
And today, with double-digit unemployment, those credit card borrowers are increasingly unable to pay.
The truth, the whole truth, and nothing but the truth, so help you God.
I do. Don Bollinger, like millions of others, had refinanced his credit card debt into his mortgage. And so when he lost his job, the extra debt he took on led him into bankruptcy.
That's all the real estate that you have?
Yes. It's been hard. And it still is. For some of us, they just make it impossible to do the right thing. I'm just, some guy that's laid off, live out in the country. But from what I see, it's just greed. And you just struggle and you keep praying that Washington will pass something that's going to reach down and help me, and it never happens.
In fact, in the U.S. Congress, there have been some who have argued for credit card reform for decades.
The list of troubling practices the credit card companies are engaged in is lengthy and it is disturbing.
But passing legislation to rein in the industry proved to be impossible.
Consumers are trapped.
Because the banks are one of the most powerful lobbies on the Hill.
The industry got...
Niggas do not want to go against the people that's funding them, and a lot of people that's behind these banks is a lot of people that's behind y'all favorite politicians. You understand? It's like, same people y'all voting for, same people that got y'all hemmed up. You see? They telling you right now.
Got carried away, got arrogant, and they could never be beaten, so they could do whatever they wanted to. And it was always, when I counted noses, I didn't have the votes.
Senator Richard Shelby is the ranking Republican on the Banking Committee. While he has never been known as an advocate for credit card reform, he's not always sided with the banks. Why hasn't there been credit card legislation to control some of these abusive practices?
Well,
Why did it take a near depression to do that?
Obviously, it's lobbying power.
Lobbying?
It's a powerful lobby group up here. We need to proceed carefully, but we do need to proceed.
It's really hard to get a bill through the U.S. Senate when the industry is pouring money into Washington. It's a very difficult environment to have a reform bill passed.
Nearly every member of the Senate...
They telling you straight up, flat out. They telling you straight up, flat out, right here. Listen, even though they doing the American people wrong every day, the government, it's hard for the government to help out because they're paying us, dude. They're giving us so much money, bro. Like, why would I want to, like, what do you mean? Like, what? They're taking your money, giving me money, I'm cool. That's how they feel about it. You know what I mean? So, let's just get back into it. I ain't gonna give y'all too much.
Banking Committee has received large contributions from the financial services industry, including the chairman of the committee, Senator Dodd. The financial service.
Oh, we're gonna break this in half. We definitely gonna bust this episode in half. Just cause like I got a lot of content drops and I gotta do some other things. But I'm gonna do like 23 minutes of this, something like 20-some minutes of this, and then we're gonna slide over to the I gotta shoot more videos. But this is gonna be part one. If you're enjoying this so far, make sure you drop a like, subscribe, and hit that bell icon so you know when I drop part 2. I'm probably gonna drop part 2 like tomorrow for real. I just know I need to. This was the long one that I was gonna have to split in half. I got a whole bunch of like 1-part reactions and stuff coming for y'all. So just stay tuned.
This industry apparently has given as much as $30 million to the members of your committee over the last election cycle, $7 million to your campaigns.
A lot of good it's done, huh?
Are you saying they're wasting their money giving you campaign contributions?
No, not necessarily. I listen to people, but anybody who thinks they can come in and make a campaign contribution is going to get an outcome based on that is certainly terribly mistaken. The need to reform credit card practice.
That shit crazy. Say, yeah, you could donate, but that ain't gonna help. It's the big dollars that do the pushing. It's the big dollars that do the pushing.
This has never been more important.
Dodd points to the fact that he introduced legislation to take on the credit card industry earlier this year, as did his colleague in the House, Congresswoman Carolyn Maloney.
We can stop these abusive practices by
It
voting
had gotten to the point that I couldn't even go to the floor of Congress without hearing stories about credit card abuses, and it was really getting out of hand.
We need to protect our consumers, not
Times were different now. Many Americans were demanding change.
The Obama administration had done its own polling and seen that there was deep anger and hostility out in the country towards credit cards. And the administration knew that this would be an easy political target.
Lied to me. They were like, hold on, y'all niggas lied to me, man. Yeah, everybody started realizing y'all niggas lying, that all these real little small words on the back of the envelope, they really mean something, and now it mean I owe y'all money. See, nah, bruh. Of course. Like, I don't know why credit card companies thought, yeah, let's just lie to them flat out. Don't tell them the truth. Actually, you know what? Put the truth where they can't understand it instead, so they don't say that we lied. And we're just gonna do that, and they're gonna be fine with it. For some reason, I don't know why, like higher ups thought that shit was gonna float. Like, yeah, y'all got y'all. I mean, granted, I guess the ones who started it and were initially, doing it, they ate off it, got out of the game, and generational wealth was built from it. I don't know why so many higher ups after the initial ones were like, yeah, let's keep doing this. Like this is still the way. Y'all gotta realize these companies are still doing this to this day. Like right now, like while y'all are watching this on June 8th, 2024, they're still doing this shit to this day. This video was dropped only like 2 months ago, or like a month ago, like 9 months ago. But you know what I'm saying? It's a very recent, topic of interest. You know what I mean? And I definitely think that a lot of y'all either should make sure you really know what you're doing if you're gonna get a credit card, and if you don't even feel like dealing with all of this like complicated bull, just don't get one. You can survive without a credit card. Just gotta make money.
People are angry out there.
Yeah, justifiably angry. I mean, the system failed them.
Timothy Geithner is the Secretary of the Treasury.
We can't tell the American people that we're going to forget the damage caused by this and leave this system basically as it was. We're not going to do that.
But even with the new political realities, it would still be a big battle to get the legislation passed.
I didn't even know whether it was going to get out of committee. Industry people were coming up, oh, Carolyn, we'll work with you on other things. They were basically saying, we know we've won, you've lost. Everybody was smiles.
In the end, the law made it through Congress. It makes it more difficult for credit card companies to suddenly change interest rates, something that might have saved Don Bollinger and countless others like him from bankruptcy.
It ends the most abusive practices, like anytime any reason retroactive interest rates increases, practices that have trapped many Americans in debt.
But the real test of change ultimately is whether it makes a difference in the lives of the American people.
By the time the bill was ready for signing, the Republicans had joined in, having won major concessions from the Democrats.
This legislation, while it is significant, probably the most significant in the card industry's history, it still doesn't go far enough to clean up a lot of the practices.
It was an important win.
I'm saying there was a good win. It was an important win for sure. What you talking about? But like Buddy just said, like what y'all gotta realize, like as we're speaking right now, as this video is getting shot, they're pulling some of just the little give that they gave from that bill. They're pulling that shit back right now. They're pulling that shit back right now. What? Just wait for the election cycle to end. Y'all gonna see what I'm talking about.
Sense that it said the banks may not completely own the legislative process anymore.
But it wasn't really a great win
for consumers?
It's a set of